wishes with Santa. Yes, hold on, Harry, I'm almost done. I love this trading.
It's a great day, a huge spread. Our thanks to the exchange as well. They do it right. Have a great long weekend.
And the market's up. We got one more hour of trading here to go.
Let's get back to the judge.
All right, Carl, thanks very much. Welcome to the Halftime Report. I'm Scott Wapner. We are tracking the last hour of trade today on this holiday shortened Friday. Stocks nicely higher as the month winds to a close. Joining me for the hour today, Joe Terranova, Stephanie Link, Malcolm Etheridge, Bryn Talkington. Let's check the markets. Told you we've got a nice gain going on today. The Dow's good for about 300 or so. We'll show you the majors. S&P's looking pretty good as well. There's your full picture. Russell up about 0.5%. Yields down, and that was pretty good for stocks too. Joe, you can answer the question of what you want for the holidays. I mean, the kids had some pretty good answers. You want a Santa Claus rally?
A Santa Claus rally would be good, and I think it looks, Scott, like we're potentially going to get it. We've reversed a lot of the negative momentum that greeted us in the month of November. I don't know if you feel the same, but I think a lot of the lifting and the return of animal spirits has to do with pricing in the fact that you probably will get that December rate cut. There was some skepticism surrounding that, so I don't know if we have the ability to show it, but if you could show a year-to-date as I'm speaking, S&P equal weight chart, it's been the S&P equal weight. It's been the Russell that's been kind of carrying the market over the last 5 days, while NVIDIA is actually struggling somewhat. Thankfully, we have Alphabet to kind of offset that. But that broadening out narrative is back in play, and I think it's attributable to the potential for a December rate cut.
Yeah, I mean, rates started moving a little bit lower, and that really ignited the Russell over the last few trading days before the Thanksgiving holiday. Malcolm, so we're putting together a good week. We've had a nice bounce back after that really, pretty significant bout of volatility that we had, and we may just eke out a gain for the month, which a week ago might have seemed unthinkable.
Yeah, and I think Joe is making an important point that the equal weight is what's actually been performing well this month. It's surprising to me. You've heard me make the case several times that portfolio managers that have been underweight tech and have been trimming their tech positions going into the end of the year risk being caught out. I think that probably still holds true for the entire year, but it's interesting just specifically for the month of November that hasn't actually been the case.
Yeah, Bryn, what about you? How does this next month and the last one of this year shape up, do you think?
Well, I mean, we've owned the equal weight for a year and a half, and we're still waiting for it to catch up to the S&P. So I'm a little bit suspect of the small cap and equal weight rally, even though we own equal weight, just because it's still been a laggard. I think you're going to continue to see the market go up, but I think you're going to continue to also see this dispersion between the big names that we talk about all the time. And I think, Google, NVIDIA, I think that's going to be a favorite hedge fund short, kind of like how Tesla and Uber was. But I know a lot of hedge funds went short NVIDIA last week, long Google. And I think that kind of rotation will continue in that dispersion, which ultimately is a healthy thing. And I think that eliminates and kind of takes that bubble talk off when the market is doing that for you. And so you're just seeing that dispersion, I think, with these tech names just continuing to increase.
This comeback that we've had, Steph, over the past week or so has made people a little more bullish, I think, into year end. Goldman's trading desk, John Flood, puts out a report, says the wall of worry has been extremely high this year and remains omnipresent. It's a bullish signal, he says. The S&P 500 has closed on 36 all-time highs this year, the last one on October the 28th. I believe there are still more to come before we turn the page on 2025. This is what an end of year, and you know what, Joe alludes to it too, maybe an everything rally. That's what this could look like.
Look, the market always worries about something. I actually worry when I don't worry, because that means that we're complacent. But I think the setup into the end of the year is very positive. Seasonally, on average, December is up about 1.5%. That's one thing. The second thing is the economy continues to surprise to the upside. We had very good weekly jobless claims this week that didn't get a lot of attention. And now you're at the 4-week moving average at something like 224,000 weekly jobless claims. That's very healthy. It's cooling, but it's not collapsing. So we have the labor market, and the leading indicator is weekly claims. That's actually okay, number one. Number two, durable goods rose almost 10% this past month. The PPI numbers were pretty tame, still elevated at 2.7%, but certainly better than what we had been seeing over the last several years. And final demand for goods was actually the biggest number since February. So you add it all up, the economy is running at 3.5%, 4%, whatever the number is. It's above trend. That's leading to double-digit earnings. And I do think you're going to see an absolute broadening out in the market so that you're going to see, look at financials today, Scott. They're doing quite well. Industrials are doing well. Even discretionary doing really well. So I think it's going to be tech plus everything else. And I think you want to be as long as you can into the end of the year.
Wow, Joe, I mean, that sounds like an everything rally. We have stocks, bonds, gold, Bitcoin. Bitcoin's recovered a bit. Gold went through its own bout of volatility, looks to be back as well. What do you think?
I think, look, the Federal Reserve is going to be in a blackout period ahead of the meeting. So unless there's something that kind of takes away the probability of that rate cut coming in December, then the broadening out narrative, we lose momentum in that. But 52-week highs today, there's 17 of them. You do have Broadcom, you have Analog Devices, but beyond that, you have your GM, you have your Las Vegas Sands, you have your Synchrony Financial, you have Walmart, Welltower, the steel names, Nucor, Steel Dynamics. So it's broadening out. We've talked a lot about healthcare. I've told you, continuing to build the position in the XBI as it moved towards 125. I don't know how Bryn feels about natural gas. I think natural gas is breaking out. I own EQT. That's at a high for a year. That's a trade I think you could look at. And I think also precious metals have come back nicely into play. GLD, which I have ownership, I'm actually looking to add to that position.
Well, there you go. There's your February gold contract up about 1% here. A nice little move. I mean, we talked a lot about healthcare, as you said, and Malcolm, we have because it's been the place to be. By far the best sector in November, up 9.5% as a group. Comm services has been just fine too, but it's been a healthcare kind of market. Do you feel like it stays that way, or does it revert back to tech and AI? We're not so much talking about bubble. We're talking about Alphabet getting to $4 trillion in market cap.
Well, I think it's important and also healthy for the conversation that finally another company is taking over the conversation, if you will. So we haven't really talked about Alphabet in the same way that we've talked about Microsoft and NVIDIA and Amazon even for the last 18 months, roughly. So I'm glad to see another company kind of jumping into that race that we're talking about, who's going to dominate the sector. I also think that it's healthy that this rotation shows that there is some staying power for the AI trade. So to your question, I think that more than likely tech continues to be the thing that leads. The contributions, the investments into AI infrastructure have really been the thing that drove GDP the first half of this year. It's like half of all GDP spending the first half of this year was all related to AI capex. And so I think it's unrealistic that healthcare or anything else takes over that dominance anytime soon. 8 of the 10 largest companies in the S&P right now are tech names. 35% of all the weighting in the S&P are tech names. And I think that probably carries us through 2026 and beyond.
Kind of a crazy month, Bryn, in terms of tech. When you look at the outperformers, you know, Alphabet obviously is a headliner story. It needs to get to 331.48. We just showed you that. But the fact that NVIDIA was down 11% in the month, and Meta, Amazon, and Microsoft were also lower, this is a trade that, though it underperformed, down 5% as a technology group, Alphabet and Apple really carried it. It would look worse, much worse, if not for this Alphabet comeback.
Yeah, I mean, I think that an Alphabet specifically, you know, obviously bought Alphabet right after earnings. And I think Alphabet right now, we've all known they've been vertically integrated all along. But as I said earlier in the week, I really think Sergey coming back is a game changer to take out the bureaucracy, to take out just the slowness of Google, as Google has just not executed over the past few years. And I think having that founder mentality come back of let's move quickly and let's take out the bureaucracy, you're seeing that in the price. And I would say about NVIDIA, though, I know obviously NVIDIA has traded a little bit down after this last earnings, but just to give some context so we don't hang on short-termism, is over the last 3 years, NVIDIA is up 1,000%. Google's up about, 250, 260%. So, I mean, NVIDIA has just been a beast. So yeah, it's going to rest for a while. And what's even crazy is those earnings have grown just as fast as the stock on NVIDIA. So I think it's taking a breather like it did last year. Remember when it couldn't get above 150 for close to a year? We're probably going to enter another time period that 180, 200 is going to be a peak. So like right now I have calls on 200 January calls, and I don't think it's even remotely going to get called away. So I'm happy to start selling calls on NVIDIA right now while it's in this consolidation phase.
Brent, you're not troubled at all by hearing that Meta's going to ultimately switch to TPUs, the tensor processing units, that maybe there is something about the chips that Alphabet, which they started in 2013, are now gathering momentum, and maybe that's going to come as a negative impact to NVIDIA?
No, I mean, I think that everyone's talking about chips as if they're a monolith, and they're incredibly heterogeneous. And the useful life of all of these chips are different. And so you can use TPUs, you can use NVIDIA, the tech stack of NVIDIA, but do understand as it relates to the software. I still think NVIDIA, with the CUDA software and their ability with that software stack to continue to be in pole position, is going to continue. At the same time, though, you know, these TPUs have been around, to your point, for over a decade, and so it's nice to see another player. But I do not think it's this, we have to separate all of these different use cases, and I do think that you're going to continue to see both Broadcom, you're going to see TSMC, now Google, and then NVIDIA as well can all be winners in this space.
I'll tell you what, Steph, you know, we can talk about the broadening all we want, but I don't think that not you specifically, but I don't think we want the kind of leadership that we had in December, what we've had in November, for a big rally in the market. I mean, I'm sorry, but if you get healthcare, materials, staples, and real estate as 4 of the top 6 sectors in December, the market's not going to look that great. It's just not, because those are traditionally defensive, more defensive areas of the market. If you have technology underperform the way it did, you're not going to get a big move into year end. However broad it might look, it's not going to be great.
Well, I mean, that's why I pointed out financials and industrials today.
Yeah, well, financials only up 1% in the month, too. That falls into it also, right? That falls into it also. If you don't want a carbon copy of what you just had.
No, I mean, look, technology and comm services is 35% of the market. So we do need technology to participate. But technology is participating. Okay, so maybe NVIDIA was weak. Maybe Broadcom was weak. Maybe some of the other technology companies are down for the month, but they're up substantially for the year. I mean, look at Seagate. Look at Western Digital. Look at Lam Research. Broadcom, I mentioned, Micron. I mean, there's so many companies that have done in technology that have done so well. So a pullback is okay, but that's why I'm paying attention to some other sectors, because they're meaningful. Now, I don't want staples to be leading by any means, and maybe not even healthcare, because that's, to your point, they're more defensive. But I look at financials and I look at industrials, and those are more cyclical. That's more tied to the overall economy, and that's why I always pay attention to what is happening in the broader economy, and it's actually doing well. And so those sectors should do well.
Industrials down 1.5%. In November, discretionary down 3.5%. Those are, classic cyclical areas. Technology down 5%. My point only is that if you are hopeful of a meaningful move into year end, that it can't look like November looked. It's just not going to materialize if you have a carbon copy of what you just got. Now, I'm not suggesting in any way that you will get what you just got. The reason why tech had an underperforming month is because there were, AI questions, you had debt questions, you had depreciation questions. Now, maybe those persist into the end of the year, but the market activity, the price action, Steph, over the last 2, 3, 4 sessions would suggest that maybe we have a reversion back to the way we got here in the first place, and that's with tech and comm services leading the way.
Well, it should be. We should have the AI, data center, grid, power, all of that whole food chain. We should be seeing better results from the stocks. They've had a nice run, and it's not just technology. It's all of the industrials that I just met, we talk about, and it's grid and it's power, and all of those things are very interrelated. And so, but the demand is so incredibly strong across so many different parts of that food chain that I do think you will see a rally into the end of the year. And oh, by the way, I think they're going to continue to rally in 2026 and 2027 because I think we're in the second inning of all of this. And I don't believe that we're in a bubble. So you put those to the side, those should do well. But if you have an economy that's growing above trend, these other sectors should do well. These other cyclical sectors. And I, by the way, do believe that discretionary is going to play catch up as well. I think you're going to have a great holiday season. The consumer has a job. The consumer has better wages. Inflation is coming down. So to me, like, you got AI, but then I think you also have consumer, and you add it all up. And that's really where the better value is in discretionary, in financials, in industrials versus tech. But, you know, you don't want to fight against the tech, not the wave, not the tailwinds that are there.
Malcolm, I come to you. You own the stock. I've talked to you about it before. But now how do you think about it? Are you watching the debt, the credit default swaps, more than the stock price these days?
Yeah, so this one has given me a ton of pause. And so one of my rules as an investor is just when in doubt, don't. And this one has a lot of doubt around it. So I've been trying to find an opportunity to get back into this name following selling 50% of the position across the book back in October. And I've just finally decided there's too much smoke here for me to feel comfortable adding additional dollars back into this name. So we're taking those gains. We'll find another place to deploy it within the AI trade that I think is more likely to be on solid footing, because just the reporting that the information has done around Meta and their creative financing and off-book financing and everything else of their data centers to get into this space in a way that doesn't shake their balance sheet makes me wonder the same about Oracle, even more, I think, because they don't have a direct path the same way that Meta does to generating revenue from those investments. And so I think that Oracle is a story that needs to be continue to be reported on, like you just mentioned, Seema's been doing day after day. Until there's clarity there, I just think it's one that you stay away from.
It tees up a pretty good week for what's going to come down next week, software earnings. The software ETF, by the way, is having its worst month since January of 2022. Now, it's been skewed by a few names versus others. But Malcolm, you do have a move related to that, and I think that's what you're alluding to in your answer about Oracle just now. You taking your dollars and putting them elsewhere where you feel more confident. Maybe cyber, maybe Zscaler, for example, which, by the way, the target got trimmed today to 390 from 400 at Berenberg. You added more. Why?
Well, I don't know if a $10 trim is that meaningful to me as an investor and would shake my confidence all that much. And I think just separately, I think throwing the software names in with the rest of software, throwing the cybersecurity names in with the rest of software is the market doing a disservice here. And it's been happening for quite a while, and I think that's the reason that a lot of these names have been trading down. But I bought more Zscaler on Wednesday following earnings because the stock traded down about 10%, and I don't really know what the market was looking for. They reported 26% growth in annually recurring revenue year over year. They reported additional, they beat basically across the board. And to me, it looks like an opportunity where this company that's redone its sales force over the last year, it's gotten very focused with the Z-Flex model on being the platform that a lot of these companies tried to become. To me, it's firing on all cylinders. And so investors looking for an opportunity to get into a name that hasn't really had the growth that we talked about, NVIDIA at 1,000%, for example, or even Alphabet at 250% or something. I know it's selling at a little bit of a premium right now, but Zscaler, to me, 45% or so of the Fortune 500 they're securing right now. Looks like a great opportunity to be buying into a company that's been taken down with the entire sector that it doesn't really belong to, in my opinion. Yeah,
we'll get some earnings next week. We'll have time on both Monday and Tuesday to talk about those. I want to get to one more move, though, out of the financial space. Bryn, you bought more of Blue Owl Tech Finance, OTF. We really were watching BDC stocks very closely over the last month, at least, and they all had a bad month, all of them. Why are you buying more?
So I think when you look at how people underwrite debt, right, whether it's PIMCO, whether it's Blue Owl, you really have to, or Apollo or Ares, et cetera. Who's doing the underwriting, and do you have confidence in that team? And so to me, I keep coming back to this strategy, which I added to again last Friday when everyone had their hair on fire again around private credit. when ultimately I know the team, they do a very good job of underwriting. Every position I have transparency of, anyone does if they go to the investor relationship website. So it's like over 80% are first lien, senior secured. These are profitable companies. The NAV or the book value is closer to 17. And so I think over the next year, I can add to this position in the 13s, 14s. I can probably get 10 to 15% upside in the name and then another 10% in yield. So when I look back a year from now, I think I can get a 20 to 25% total return on a name that I know the team and the underwriting. I just think the market is wrong on this. They're really confident the market is wrong on this, and Blue Owl, especially in this strategy, does a wonderful job underwriting the debt they're taking on.
All right, you see the market pushing that a little bit higher, about 1% or so on that. All right, we'll take a quick break. We'll come back. We're going to check in on the start of the holiday shopping season and Stephanie Link buying more of a retail name as Black Friday gets into high gear. We're back next. Steph, brings me to you because you have bought more of Dick's Sporting Goods, which is a new buy. And why are you adding more so soon?
Well, the stock is down 11% from its highs, and I just went through all of the details from when they reported earnings, and the numbers were really good, Scott. Their core business is humming. Same-store sales at 5.7%, and that's versus 6.4% last year. So it was a really hard comparison, and they're still putting up really good numbers. They guided higher, and they're increasing their market share for sure. Now, the one problem is Foot Locker. They bought Foot Locker, and it's been a disaster for them, but they took a charge. They're right-sizing what they need to do. They're improving the inventory. So it's basically, I think the upside is really going to come from the continued strength from their core business, but then as they turn this Foot Locker franchise around, I think you're going to really see better than expected same-store sales going forward. So it may take a little time, Scott, but I want to be more long consumer discretionary, as we talked about earlier, because the consumer is doing what they're doing. They're spending. And we're getting all kinds of data points that reflect that, right? I mean, retail sales last month grew 5.7%. That's a really big number. And then you look at like some of the card spending, the credit card data. Credit card data is actually accelerating. So I think the consumer is going to show up for the holidays, just like Courtney just talked about, and I want to be more long.
What gets you back into the gap? What does stock have to do? It's had a good month. You need a decline to get back in?
Yeah, I mean, just a little bit. I would love it to. I mean, it's a pretty high beta stock, Scott. So yeah, on any given day, it could be down 3, 4, 5%. If that's the case, I absolutely would be getting back in. I mean, the stock is trading at 11 times forward estimates. By the way, so is Dick's. I mean, 11 times earnings, where earnings are actually going higher. And they are also delivering. Gap is also delivering on the comp side across the spectrum, other than Athleta. But nobody in athleisure is doing well. So I think they're going to turn that eventually. But the other parts of the business is key. Old Navy in the Gap brands, Banana Republic, that's 80% of their revenue. So yeah, I mean, I'm looking at it and I'm watching it every day. I'm kind of mad that I sold it, but I made money. You know, I was up 25% in the name. So if it pulls back, I definitely like the story because I think the turn is here for real.
All right, you'll let us know. Quick break. All right, we are back. Let's do some committee stocks on the move today, or calls. Dell, target raised to 160 from 150, reiterated by it. CITIC Securities. Bryn, you own the stock.
Yeah, I mean, just last week we were talking about that double downgrade down to 120 by, I think, Morgan Stanley because of memory prices. And so I think Michael Dell and team did a great job of, although gross margins were down about 1.4%, operating margins actually went higher because of cost cutting. And so they increased guidance. I think that's probably the biggest reason the stock was up after earnings, is that increased guide. And that infrastructure solutions group is really, that's the data center AI play, is just growing. You know, revenues were up 27%. And so to me, this is like, you have the anemic PC area, which is not growing. And then you have this other group, which is growing, looking to grow 27% this quarter and increased guide. So I think it's more of like a growth at a reasonable price company. And once again, Michael Dell has seen so many cycles. And so I think the stock should continue to be part of people's basket around benefits from the AI data center play longer term.
All right, let's talk Netflix now. Stranger Things 5 premieres. You watch that? You own the stock. Were you ready for that last night?
Listen, it's I was not ready for it, and it basically over 50% reported issues with streaming. This is comparable This is comparable to what House of Cards was for Netflix. And let's first talk about the stock for a second, because the stock is down since the end of June nearly 20%. Over a one-year basis, though, it's still 21% higher. And Scott, I think this is a classic example of you need to exhibit patience in this name. I don't think there's been any fundamental deterioration that suggests or motivates someone to sell out of the stock.
You think it ran up too much?
I think it might have ran up a little bit too much. I think it also right now is going through a consolidation period. Look, at the beginning of the year, there was a lot of good news. There was a lot of good news surrounding what we knew what was coming with Stranger Things. There was a lot of good news surrounding live sports programming. And I think we pulled forward a lot of the positive.
You go from like 80 to 130 in a reasonably short period of time back towards the spring, right?
Very short period of time. So I think this is a moment where you're kind of waiting. As it relates to Stranger Things, just think about how powerful this is. You're talking about from 2020 to the second quarter of 2025, nearly $1 billion in streaming revenue. How many subscribers did they add specifically because of Stranger Things? That's remarkable. I would argue it's probably in the millions.
There's that big run in the chart from mid-22 until earlier this year. Starbucks, the union escalating their strike on Black Friday. Steph, you own the stock. You bought more this week.
And if it's weak on this news, I would buy even more. It's not a great headline, but they will resolve this eventually. The turnaround is the most important part of the story under Brian Niccol, who's great at turning around companies, and it's happening faster than expected. And the fact that they've seen the first positive same-store sales comp, the first one in 2 years, absolutely proves that he is doing a really good job so far, and the turn is just beginning. So again, if it's weak on this headline, I'm a buyer. I really also like the JV that they did on their China operations. They have 40% share now in the China operations. They got $2.4 billion in cash as a result, but they still participate in the growth from 8,000 stores in China to 20,000 over the next 10 years.
All right. Crypto's made a bounce. We will take a break because Bryn has made a move in that space. We'll tell you what it is next. All right, welcome back. Told you Bitcoin's had a bit of a bounce and Bryn's made a bit of a move. You bought more Bitmine immersion, BMNR. I'm wondering what you think of Bitcoin as an asset at this point, and tell us about why this move.
Yeah, well, I bought it last Friday. You can clearly see the shorts were just hammering both Bitmine and MicroStrategy. The stock got to 25, so I just held my nose and bought some, which is what you have to do, especially Ethereum was down close to 40%. I think that Ethereum is more of a technology. They're going to continue to build these stable coins on top of Ether, and I think that Bitcoin is more like digital gold. And so I think there's different reasons to own them both, and I think Ethereum's far cheaper just because the use cases, I think, are just starting with all the stable coins.
All right, Coinbase, by the way, got its target trimmed today to 404 from 417. We'll take a break, please.
Yeah, speaking of Liberation Day, the cybersecurity ETF bug, it's almost back down there. I think it's a good entry point if you don't have any cybersecurity exposure.
Okay, we found out, Malcolm, that you've added to yours. What's your final trade?
Yeah, I guess doubling down here. CrowdStrike reports next week. See my previous comments about Zscaler.
Okay. Steph?
Amazon positive catalyst next week at their reInvent conference.
And Joe T.
Speaking of Amazon, how about Prologis? It's a REIT which has a relationship with Amazon.
All right, they're going to ring the bell to end this holiday shortened trading day. The kids are up there. I see Santa up there, too. They're going to ring in a positive month, too, it looks like, for this month of November. We had to get about 68.42-ish to do that.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It is Friday, November 28th. It's actually 5:34 p.m. as I'm recording this video. And the market's up again, which is great news. As you can see here, the Dow Jones was up 0.61%, NASDAQ up 0.65%, S&P 500 up 0.54%, and the Russell 2000 up 0.57%. It was a half day of trading here. And let's take a look to see how the individual stocks did in the markets, in the S&P 500 to be exact. By the way, before I get into this, here's what we're going to be covering today. We're going to go over the technicals of the S&P 500, the Qs, the Dow, the Russell, the VIX, the Euro stocks. We'll take a look at about 13 stocks and ETFs that were talked about on today's halftime report. Okay, that list that you see right there. We're going to look at some of the Mag 7 stocks like Apple, Tesla, Meta, Microsoft, Amazon. We'll also take a look at sectors and also one of our members' requests. And we'll do all of that. We'll utilize the Ichimoku indicator. And I'll give you guys a quick, brief synopsis of that as well in a few seconds. Okay. So let's look at that heat map again. And then we'll get into those technicals, like I said. So as you can see, the majority of the stocks, most of the semiconductor stocks did well. NVIDIA, however, was down 1.81%. Most technology stocks here did well, except for Oracle, down 1.47%. The healthcare stocks did pretty well, except for Eli Lilly and Gilead. And the energy stocks were up quite a bit. Utilities were up, consumer defensives, industrials. You know, the consumer cyclicals, Amazon and Tesla was up. Meta was up 2.26%. So the software stocks did pretty well here. Let's take a look at the sectors. By the way, this is the end of the year. I'm sorry, end of the year, end of the month, right? So let's look at the 1 month performance, folks. Let's look at that. We'll start off with the 1 week performance. This is what it looked like for the week. So a very positive week, as you can see here. And then for the 1 month performance, let's see what that looks like on the heat map. Ooh, interesting, right? So as you can see, some big winners, like Google was up 16.61%, Eli Lilly up 32.2%, Johnson & Johnson up 10.89%. The healthcare stocks did really well here. Walmart was up 7.86%, Coca-Cola up 6.98%, NVIDIA, though, down 14.5%, Microsoft down 9.15%, Oracle down 26.64%, Palantir down 15.27%, Meta down 13.8%. We'll see if we'll see a turnaround here, though. That's the key thing. Let's get back to that 1 day performance, and then we'll go to the groups. These are the sectors, and you can see for the 1 day performance, energy was the leader, followed by basic materials and consumer cyclical, and healthcare was down just 0.33%. When you look at the 1 week performance, basic materials, communication services, and consumer cyclical were the top. Energy at the bottom, up just 1.61%, but they were all up for the week. Here's the 1 month performance with healthcare at the top, 8.74% versus technology down 6.4%. All right, let's get into these ETFs here. Let's start off with the S&P 500, the SPY. We're looking at the weekly chart. As I mentioned on Wednesday, right? We had the day off. I hope you all had a great Thanksgiving. You know, we were above the 9 period. So very quickly, for those of you who are new, may not be familiar with this indicator, it's comprised of 5 lines. You've got the green line, which is the Tenkan-sen, 9 period. The Kijun-sen is the 26 period, the midpoint of the last 26 periods. The Senkou-span A, which is the midpoint of these two moving averages projected 26 periods into the future. The Senkou-span B, which is the midpoint of the last 52 periods projected into the future 26 periods, which basically creates the cloud itself, the Ichimoku cloud. Then you've got the Chikou-span, which is today's closing price projected 26 periods ago. In this case, we're looking at a weekly chart. So 26 weeks ago, we can see that the Chikou-span, today's closing price, was above the candle 26 periods ago. That's bullish. That's what we want to see. When it's under, it's bearish. And you can see that decline right there that we had back in April. So S&P 500 looking great on the weekly chart. And here's the daily chart. You can see that it broke through above the moving averages here. There's a few things that aren't perfect here with the Ichimoku, though. I will say that on the daily chart. You know, because of this little decline that we experienced, it messed up the moving averages. We've got the Senkou-span A now currently still under the Senkou-span B. The Tenkan-sen, the 9 period, is under the Kijun-sen, the slower moving average. That's not good. And then everything else looks pretty good. We've got Chikou-span above price again, so that's bullish. With the Qs, same situation, right? You can see the negative crossover of the cloud itself. We had that long run right there. But this little downturn that we had did break the trend. However, these last 5 days, as you can see, it's trying to reestablish the trend. It's going to need to do some work, though. Still, it needs to get above, like you can see here, for example, the prior high right there. You can see that level of resistance that needs to get through. And I think if it can break that, then we'll see it continue to the upside some more. Dow Jones also. Now the Dow actually still has a bullish cloud here. Chikou-span is above price, but the faster moving average is under the slower one, so it's not quite there. The volume is also drying up a little bit. Just letting you guys know that if on Monday, I wouldn't be, surprised to see price pull back, retest maybe the Kijunsen, maybe pull back halfway, to the 50 mark, somewhere close to the cloud itself, and then take off. It's possible because the volume is declining here. But that's, of course, because of the trading week that we've had. It's a holiday, right? Thanksgiving, there's not a lot of trading happening here. So it's actually expected. Russell 2000, here it is on the daily chart. Again, a bearish cloud, but price is above the cloud. So, and the faster moving average is still under the slower one. So it's a mixed picture here, but it's trying to reestablish the uptrend. It did get above this high here, so that's a positive. This is what the weekly chart looks like. You can see how it popped back above the green line there. That was important, right, to reestablish. So maybe it was just, again, that's why it's important, folks, to look at those weekly charts. Make sure that you look at the weekly and daily, because it can give you give you a little bit of a heads up of where you might find support. As I mentioned before many times, the Kijunsen is going to be a very strong level of support. That's the baseline. And many times price will come down, test it, and then bounce and continue its run. The VIX still dropping here. That's the weekly chart right there that you're seeing. Here's the daily. It was down 4.89%. Coming back to these low levels again, which is a positive because we want volatility to come out of the market. And then you've got FEZ, the Euro Stocks ETF. Here it is on the daily chart, reestablishing, getting back above the cloud for Wednesday and Thursday. The cloud itself, the future cloud, is slightly bearish right there, but overall, we also took out this low. But here's the thing with this situation: we don't have a downtrend here. We have an established, we've got a higher high from the prior high, but we do have a lower low. So we took out this low. It's what I call a megaphone pattern. Okay. It's not just me calling it that. A lot of technical analysts call that. So we don't really have an established trend here at this point because of the fact that we broke through this level, and that was significant. But because if this thing starts to drop, hypothetically, I'm just, we're hypothesizing here right now. If it does start to drop, gets under the cloud and gets under this low here, then this will be a lower high from the prior one, and then we will have established a downward trend. It hasn't happened yet, though. So we'll see what happens here. It was up 0.56%. Usually going into the year's end, we tend to have rallies, so it's more than likely that we're going to see a rally for the rest of this month. As long as things, the news don't get too out of control. Here's Gap, consumer, cyclical sector, the apparel stores, down 1.67%. It got a little bit far away from the moving averages and pulled back a little bit today. Here's the weekly chart. I like these two out of the 13 stocks that I'm going to cover right now from the show. These are the only two that look technically sound still, because both on the weekly chart and on the daily chart, you've got a bullish cloud, Senko Span A above Senko Span B, price is above the cloud itself, it's above the moving averages, and if you look at the Chikou Span, it's above the closing price. So even though it's not technically above this candle, that white line, which is today's, like I said, the weekly, the end of the week's candle, it's basically above this closing price. So that's positive. And here's the daily chart again. So much more bullish here, as you can see. But I would not be shocked to see this thing pull back, retest the 25 level, 25.50 or so, and then take off some more, maybe. We'll see. PLD, Prologis Inc. It's a real estate sector REIT. Let's look at the weekly chart. We'll start off with that one first. It's currently above. You can see how it's been finding support above that 200-day moving average, bouncing off of it, now taking off, right? And it's also breaking above this little high. That's also very bullish. There are some resistance levels on the weekly chart. Let me just throw that level on for you guys to see. It's the high of that prior candle going all the way back to September 13th, 2024. It's at 132.57. That's where you might find some resistance. And how far are we from that level? We're approximately 3.3% away. That's where I'd be looking to potentially take some money off the table if you start seeing reversal candle forming. If it, however, breaks right through it, then My suggestion would be to hold off a little longer. You will find some more resistance right above that as well. Right about, let's see here. Whoops. Right about that level right there. There's some more levels back here. Maybe I should use this next one here. The high of that candle is 138.86. So that is another area to watch after it breaks through that level. Okay. All right. Now, the rest of these, there's something off technically. Now, Bryn Talkington said that she added some more to her BMNR position. And yes, we've, like I said, we've been seeing a little bit of bullishness here on Wednesday. Price broke above, the 9 period here, but it is still technically in an established downtrend. Okay, you can see the trend line hasn't even been broken yet here with this this trend. So I personally would stay out of this one. You can see the Kijinsen is waiting right there for resistance, and so is the cloud itself. That's the daily chart, and if you look at the weekly chart. Yes, we are above the cloud. We're above the 200. Okay, we formed a bullish harami here on the weekly chart. It was up 4.35%. Could this be a bottom? It certainly could. However, we've got a lot of resistance still above, so keep that in mind. BUG, cybersecurity ETF, still in a decline. This one has not broken above the 9 period on the daily chart. I'd stay out of this one for now, folks. We still also have a bearish cloud. So you can see how once, the cloud itself turns bearish, when you get that negative crossover of the single span A crossing under, right, that single span B, the purple line, okay, that can lead to a continued decline. All right. Let's see. CRWD, CrowdStrike is still pulling back. All right, it is still under the moving average here at Kijinsen. And let me see. It did actually break above that Tenkan-sen, the green line, by a few pennies. It's not that much. I would not be jumping in here quite yet either. That's the daily chart, and here's the weekly. A bullish harami, but still under the 9 period. Dell Technologies, bouncing off the cloud here. Now, this is a weekly chart. Let's take a look at the daily. Yeah, it's still under the cloud. I'd skip that stock altogether. DKS is Dick's Sporting Goods, still in a decline. As you can see, it had like a false sort of, gapped up, right? So it looked very positive in the early morning. But then, as you can see, it spent the rest of the day dropping down to this level here, the low of the wick, before breaking back above and closing under the 9 period. So this is what the action looked like today if we look at a 5-minute chart. So here we are on the 28th. We can see that, this was see that dotted red line that you see right there? That was yesterday. I'm sorry, not yesterday, but Wednesday's closing price right there. It gapped up in the morning. That's the dotted green line. That's the opening price. The sellers immediately started selling it off, right? And then it recovered a little bit closer to around 11 a.m. It started to recover. It got above the cloud on the 5-minute chart, but it's still, not looking particularly great here. It almost looks like an inverse head and shoulders pattern, though. I will say that. So, like, if you look closely here, you'll see that we've got there's the hold on. We've got the head here, the shoulder, and the other shoulder, and what we've done is we broke through that level. So, it could certainly continue moving up, but when you're under the cloud, I'd stay clear of stock like that. LRCX is above the Ichimoku cloud, but we have a bearish crossover here. The faster moving average is still under. The good news is it did not take out, this looks like a low right here. It did not take out these lows here. So I think that this has a higher probability of reestablishing the trend. That's the daily chart. Here's the weekly chart. You can see, yeah, it's looking very bullish here today. I think this has a lot of potential. All right, let's see what else we've got. OTF, Blue Owl Technology, on the weekly chart, broke above the 9 period for the first time this week. This could be the bottom, potentially. But look, there's not enough data here in the weekly chart for the cloud to even form, because it's, this was a stock that became public on June 13th of 2025. Here's the daily chart. Gives you a little bit more insights of the direction of it. It's still in a embedded decline, right? You can see that right there. It's still under that trend line. right? So it created almost like a shooting star pattern, which is negative. Came really close actually to the cloud, and then a sell-off at the end of the afternoon, or yeah, see that little selling that took place there. When I say afternoon, 12:30 basically, around 12:30 dropped. Okay, Starbucks. Let's look at the daily chart. So Starbucks is giving us a buy signal on the daily chart by breaking above the cloud here. You can see that little candle. Tenkan-sen is still above the Kijun-sen. That's bullish. We've got the Chikou span above price. The cloud itself is bullish. Senkou span A here. The light colored blue line is above the purple line. Now, with that said, however, you do have to take something into account, and that is this, the 200, okay, 200-day moving average, which pretty much all traders, monitor. And how far are we from that level of resistance? We're about, let's see, we'll probably hit it around about 2.7% away from here, from where we currently are. So if price can break above this prior high and above that 200, I think then it's got some potential, the Starbucks. Now, again, we're just basing this 100% on the daily chart. But because this stock has been beaten down for so long, I'm going to assume, just looking at this, that the weekly chart's very weak here. So let's take a look at that. And there it is. So you can see that it's under the cloud, under the 200-day on the weekly chart. So my suggestion would be to stay out of the stock altogether. Look for stocks that show strength on both time frames, and you'll have a higher success ratio in your trades, folks. Here's STX. Now this one here looks great on the weekly chart. Okay, it's Seagate Technologies Holdings, technology sector, up 1.62% today. What does it look like on the daily? It's starting to show some strength these last 5 days. You can see how price came to the cloud, bounced, right? Found that support right there. Created a little doji type candle and continued on. Now, where is it going to find resistance? It's going to probably stall around this area here. 297.88, which is about 7.19%. So watch that area. We still have that negative crossover, Tenkan-sen under Kijun-sen, but yeah, it's got more potential to move to the upside here, in my opinion. Then you've got Zscaler Inc., which is in the technology sector, infrastructure, software infrastructure. On Wednesday, it dropped hard here. You can see that it came up, touched the cloud, and bam, dropped. It actually opened above the 200 and then spent the rest of the day on Wednesday dropping. Today, it seems to have stalled around this area with a little spinning top, down just 0.19%. Stay out of that one, folks, because it could certainly do the same thing once again. The next time it might just come back up to these moving averages that are going to be moving down, come up to it, or hit the 200 that's been moving up, and then continue its drop some more. So here's the weekly chart, not looking good. Drop through this level. It's got some support down below, but again, it's not a strong stock to jump into here. Okay, now let's go to the Mag 7's Apple. Here's the weekly chart, very bullish, up 0.47% today. Here's the daily chart. Okay, the last 5 days it's been moving up. Looks pretty good on the daily chart. Tesla, on the other hand, is inside the Ichimoku cloud. I'd stay out of this one. You can see the lines are not aligned properly. Meta, and I'll show you what the weekly chart looks on Tesla. It's basically, okay, so it got above the Tenkan-sen here. So the weekly chart is looking pretty bullish with Tesla, but again, you don't have that here because what Tesla did was establish a lower low from this prior low. See how it broke that level? And if price starts to stall again, some more here and drops, it will be developing again a lower high from the prior one. We already have a double top scenario up here, right? Price coming up to that level, dropping, coming right back to that level, dropping. That's a negative pattern that's developed. So I'm not too excited about it, even though it's been moving up. How about Meta? Still under the cloud, under the 200. Looking like it wants to come back and retest the 200, see what happens over here, maybe break through it, but it's still a long ways from that level. Here's the weekly chart, finding some support right at the cloud. Maybe that's why price basically on the daily chart started to, you can see how those 4 candles in a row stalled at this level. This could be potentially the bottom for Meta. You can see how it stalled at that level. Once it broke through that base, got back above the green line, the Tengen-sen, it did continue moving up. And then again, here's the weekly chart. This is probably why that occurred. The cloud itself found support right there and bounced. Okay, Microsoft is still dropping. We do have a bullish harami on the weekly chart. On the daily chart, it's still under the cloud though. Microsoft also trying to show some strength, finding some support at the 200. Okay, bouncing off of it with that hammer, breaking above the Tengen-sen. Has some potential, but it's in an established downtrend. It looks like it actually broke through that trend line though. Let me see. Let me just draw that. Yeah, it broke through that trend line today. So that's a positive for Microsoft. The volume, lackluster. Nothing major happening with that. Amazon moving up 5 days in a row now, up 1.77%. I mean, it's still under the Kijun-sen. We still have a bearish cloud. It's not a super bullish scenario here. On the weekly chart, it's still under the Tengen-sen. All right, next, sectors. Now, these are the strongest ones at the top. We'll start off with biotech. As I mentioned on Wednesday, very strong. When a ETF, okay, or stock is in a established uptrend and everything looks good, Ichimoku-wise, what did I say? You have a higher probability of moving up. Now, there does come a time, okay, when the thing starts to get a little bit too hot. And biotech, in my opinion, is at that level right here. I mean, look at the distance to the moving averages that are, of course, going straight up. And sometimes this can last a little longer, okay, but just keep in mind that we are now getting into hyperdrive here, and this can end up badly if we get a reversal candle. We don't have a reversal candle here. This is still a very bullish candle. Why is that bullish? Because it shows that basically at the opening price, people kept on buying it throughout the whole week, Monday through Friday. That's the weekly level. Here's a daily chart. You can see that right there. Okay, there's Friday, Monday, Tuesday, Wednesday, and Friday. But look, that last candle is, I guess we can call it an indicator. Up just 0.25%. Again, we did have a half day today, so we'll give it the benefit of the doubt, but it is getting extended. Energy on the weekly chart looks good. Okay, it's above the moving averages. Everything looks good here on the weekly. On the daily chart, XLE looks great too. So it broke and closed above the moving averages here. All right, so we'll see what happens with energy. It gets the blue flag. The rest of these, the stocks or ETFs that do not have a blue flag, there's something technically wrong with them, okay? On either the daily or the weekly chart. Copper looks good. Let's start off with the weekly chart. Here it is, reestablishing its uptrend, breaking back above the 9 period. Okay, so that's a good sign right there. Here's the daily chart, looking good too. XLV looks good on the daily chart. Pulled back a little bit today. That's the healthcare ETF, down 0.49%. Here's the weekly chart, still very strong. No reversal candle here, but extended above the moving averages quite a bit. Silver, big week today. Look at that candle. Remember what I said? We needed to break through. We needed to figure out where this thing was going, right? Because it was developing a pennant pattern. I'll show you again, just drawing it on the chart so you can see what I'm talking about, right? That's the pennant pattern. I said this thing is going to go one way or the other. If it gets above that trend line, it's more likely to continue. The buyers went crazy. They just kept on buying it up this week. Here's the daily chart. It gapped up in the morning and then continued up 5.81%. So that's what we're looking for. That's what we're looking for. In fact, I gave you guys that signal yesterday on Wednesday, the blue flag. Gold, I gave a blue flag signal on Wednesday on GLD as well, which is up 1.24%. You can see that ADX. If you're looking at that directional movement index and not understanding what this is, what this represents is the trend itself. So what we're looking for is the green line to be above the red line. We want to see that green line moving up. We want to see the red line moving down. Okay, that strengthens the trend, the direction of the actual trend. And then we want to see the ADX, that white line, the ADX 9, moving up. That represents momentum. So the momentum is increasing, even though you don't see it here in the volume. The ADX is giving us that signal, which is positive. And I like what I'm seeing here with gold again. I'm getting excited about gold again. It did stall, however, right at the high of this high. So the 388.18. That's a level I'd watched on Monday. Okay, can it get above that? If it does, I think we're going to see a continued rally in gold. The charts don't lie, folks. And by the way, it's not a bad place to have some exposure, just in case, right? Just in case things go haywire. You never know, right? The markets are unpredictable. Oil K is the K1 crude-free oil strategy. This one is still dropping, still under the cloud. No on that one. XLC Communication Services has moved up five days in a row here, but it's still stalling at the cloud. So no on that one yet for the time being. Bitcoin popped above the Tenkan, and you can see here with IBIT ETF, it gapped up and then got sold off throughout the day here today. So here's a 5-minute. There's the gap up, right? Again, that daily candle tells us a story, folks. It tells us that it gapped up in the morning and then spent the rest of the day dropping. I didn't need to look at that 5-minute to tell you that. That's how much information you can get from just looking at a candle like this. Remember, you guys can get access to a free thing that I have. Hold on. Let me show you guys. If you go to my X page, Blue Cloud Trading, my handle on X, on Twitter, at Blue Cloud Trader. Okay? Once you're on this page, next to posts, you'll see replies. Next to replies, you'll see highlights in the center. Click on highlights. Okay? Scroll down a little bit. Scroll down some more. Ooh, look at that. You get yourself a nice candle pattern reference sheet. You can, here's some information on understanding candles, right? Again, it represents, if you see a green candle, there's the open, there's the close. The wick represents the high of the day. The wick on the bottom of the candle represents the low of the day. Okay? If this is a daily candle and it's red like this, for example, this is where it opened and this is where it closed. And this, again, is the high of the day, and that's the low, the wick. All right? These patterns, like the bearish spinning top and the gravestone doji and the shooting star, very important to learn these. So you can download that and access that for free by going to my Twitter page. All right, let's get back. And one more thing I want to mention while we're talking about this stuff is the fact that I will be coming out with another members-only video this weekend. I do this every weekend, and I go over my entire portfolio. And they're usually about a 1 hour, 10-minute video, as you can see here, the last 5 videos that I've done. And you can access these as well. How do you access these, though? How do you become a member? Just once you're on my page, Blue Cloud Trading, you'll see next to the subscribe button, and it is free to subscribe. But next to this, you'll see the join button. Click on that. Once you do, you'll see this box pop up. Has the different tiers. You're going to see the Blue Cloud Supporter, Blue Cloud Trader, and Blue Cloud Legend. In order to access those member-only videos, you do have to select Blue Cloud Trader. Okay? And you'll get access to those exclusive member-only videos. If you want to get daily trade updates, Monday through Friday when I go basically post what trades I'm placing, and I post them, you do need to become a Blue Cloud Legend level member. Where do you access those? Basically, once you do become a member, there'll be a new tab that pops up next to posts, and it will say membership. It'll look like this. That's where you click. That's where you'll find those posts. All right. And if you want to check out some of my other links, you should do that by clicking the 9 more links right here. Learn a little bit about my channel. Scroll down. Some great links here, including the $25 coupon for TC2000, the software. You can get that for the trading software, what you're looking at here, the TC2000, this. And if you like the layout that I have, after you've got the software, you can actually use this link to get the chart layout automatically so it looks like my charts, okay? All right, let's see what else, guys. Let's go back. IBIT, like I said, yeah, it was up 1.02, but it's still in an established downtrend here. SMH is showing some strength, up 1.31%. NVIDIA didn't do so well today, but the rest of the semiconductors did, and it's trying to reestablish its trend. Tenkan-sen, however, is still under the Kijun-sen. And that's the daily, and here's the weekly. Reestablishing its trend, uptrend here on the weekly chart. Very important. Real estate. XLRE, kind of sideways action, not too exciting on the weekly chart, and on the daily chart we're still we're breaking above the cloud, but I don't like what I'm seeing. This chart does not look pretty. You can see that we have a bearish cloud still. All right, XLY, we have a bearish cloud here. That's consumer discretionary. Utilities, we have a bullish cloud, but end price got above, but the faster moving average is still under the slower one on utilities. For this ETF, here's the weekly chart. Again, reestablishing its trend. Now, the analysis that I do over the weekend, I do a much more thorough analysis of the sectors. So this is not a very good representation of the entire utility sector. You have to understand something, that this sector only has, that XLU ETF only has 32 stocks. You can't really get a good assessment about the sector just from that small, number of stocks. So what I do is I go into basically the sector analysis that I do looks at hundreds of utility stocks and gives a much more thorough analysis so that you have a better understanding about what sectors to look out for going into next week on Monday. And then I also provide 25 new stock ideas, right? So that pop up on my scanner, or things that I've identified that are in strong sectors and industries, guys. It's very important to also not just look at the stock, look at the sector, look at the industry that it's within, and you'll have a higher, again, success ratio with your trades. XLP, which is consumer staples, is inside the cloud. No on this ETF. XLK, 5 days in a row popping, but look where it stalled, right at the 26 period. The good news is it looks like it broke through this. No, it did not. I take that back. It broke through this trend line today, if you want to, but then there is that to deal with too. Industrials. But here's the good news on XLK. If you look at the weekly chart, it did not make it above the Tenkan-sen, but we have a bullish harami, one of those bullish patterns. Okay. Industrials did break above the Tenkan-sen, up 0.58%. So it looks strong on the weekly chart. Let's look at the daily. Still, the cloud is still bearish. Faster moving average is still under the slower one. So no on industrial XLI. Financials, XLF ETF, above the cloud, but again, still a bearish cloud. XHB has a bearish cloud as well. That's the home builders. You can see where the price is. XLB is stuck inside the cloud. No on this one too. Bearish cloud. And then finally, we're going to look at PILBF. This is the Pilbara Minerals Limited. One of our members requested this one. So let's look at this. Let's take a look at the weekly chart. So on the weekly, it's looking very bullish, right? We've broken through this prior high. You can see that, which coincides also with literally where the 200-day moving average is. You can see that dotted yellow line there. It broke through that 3 weeks ago, back on Friday, November 14th, right? It had a shooting star, came down a little bit, retested the Tenkan-sen, and then you can see that it was up. So here's the daily chart. There's that big drop, a bullish engulfing pattern, and then it's staying above the Tenkan-sen and Kijun-sen. But it was flat today. There was like a 0% move. You can see that basically price did in fact gap up and then dropped and closed basically at the same price on Wednesday, the exact same price. So that's interesting. Okay, so that's going to do it, folks. Hope you enjoyed this video. Don't forget to hit that like, subscribe button so we can get the algorithm out to more people. Very much appreciated, and I'll catch you all in the next video.